Hello, everyone. Thanks for joining us on this Wednesday morning, and welcome to this educational presentation where today I want to talk to you about the secret to short-term consistency. Now, when we say short-term consistency, we don't mean that you're trading 5-minute bars necessarily, or even tick charts, although you can with this technique I'm going to share with you. It just means being in and out of the market quickly and having a high level of probability when your setup occurs. For example, let's look at this older chart of XLNX, all right? Someone looking at this just off site would say, well, not a lot going on here, kind of a sideways, non-directional market. And it appears to be that way. But with this technique I'm going to share with you today, in this conventional non-directional market, a buy signal would have been generated right here on this bar with just a few simple rules. You could have taken advantage of it and bought it, and in one day, you could have potentially captured 18 points. I know a lot of you are saying, well, gosh, this is really short term, Steve. I don't really trade this way, or it's difficult for me to come up with, this type of scenario where I'm watching the market all the time and figuring out these, charts and indices. Well, don't worry, because everything is automated simply and easily on our PTS Primo charting platform. It's the educational platform that actually you've been searching for, because it teaches you how to raise your level of consistency in trading, whatever market and whatever time frame. So welcome to this educational presentation. My name is Steven Primo, president and founder of Specialist Trading. If you're new to my webinars, I've been trading now for 45 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. So that's where we get the name Specialist Trading. A specialist is someone who specialized in making markets. So in the old days, before the internet and before high-speed computers were around, the way you used to make a trade or buy or sell something was you would call up your stockbroker. Your stockbroker would take your order, what you wanted to do. He, in turn, or she would call up the floor broker. That's the broker that represented your trading firm on the floor. That broker would walk up to the specialist. The specialist was someone who specialized in making a market. So he would either buy or sell that particular equity. So I specialized in making markets in about 60 stocks. I traded and made markets through the crash of 1987 and the bull market that followed. So I've had a lot of experience in virtually any market environment, straight up, straight down, sideways. I've seen just about every trading method or strategy you can think of in my 45 years. Trust me, if someone comes along and says this is a brand new technique, it's a brand new system, it's most likely been around for a while. It's just been rebranded and a few nooks and crannies change here or there. But mostly everything is around. The trick is to only focus on those methods and techniques that have shown high levels of consistency, the things that have stood the test of time. And so that's what I was taught, and those are the things I actually trade. And that's what I teach to my students around the world. All the things that I personally use, I teach to my students. And I'm happy to say we have students in over 115 countries now in every state in the United States. So we're hopefully elevating a lot of traders around the world. Now, you'll see that attention to detail in today's educational class. But before we begin, as always, we are required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this particular short-term technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember, since we are an educational company, all examples are strictly for educational purposes only. Now, another way to get free education on a daily basis from our tips and techniques is to follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. If you haven't done so already, I would suggest copying that down, because every day I post different information and you get a little bit of insight into our concepts and philosophies about trading. I'll show you some signals that have been generated recently in stocks, futures, currency pairs, even cryptos. So there's lots of great free information, as well as a little bit of financial wisdom posted on Twitter on a daily basis. Please feel free to follow us. Now, remember, we are different from other webinars in that we are first and foremost an educational company only. You're not going to hear me talk about what I think the market's going to do, or I have a great idea about a certain stock or currency pair or crypto, that what direction it's going to go, or what the perfect time frame is to trade. You see, those are all things you as a trader have to find out for yourself. Our philosophy of education is as a mentor, we provide you with the tools, the tips and techniques to elevate you, but it's your responsibility to choose which ones make you feel most comfortable and decide for yourself. That's why at Specialist Trading, we don't have trade or chat rooms. We don't have a nightly signal service because that's counterproductive to what we believe. In fact, we believe that those are the things that are actually standing in your way for success. Think of all the other websites, all the other financial websites there are where, they all have trading rooms and chat rooms. They all spit out orders on a nightly basis. And if those work so well, why do 85% of all traders fail? It's because they don't work that well. So I teach my students around the world the same way I was taught when I first started trading 45 years ago. When I was struggling tremendously, my mentors were specialists themselves who had been trading on the floor for years, for decades. And they taught me the same way. So my goal is to teach you how to trade, not to trade for you, but to teach you how to trade with the specialist edge, the same edge which has sustained me now, going on 4.5 decades, and hopefully we'll be able to do the same for you. Now, once again, we are an educational company, so this is an educational class. But a few announcements before we begin today's class. If you have a question, please wait till the end. I'm a little bit different from other webinars you may have attended. I know they like to take their questions during the presentation, but I like to wait till the end so that you can absorb all the information. Plus, I have close to 150 slides to share with you today, so I don't want to take too long out of your Wednesday answering questions where we don't get to finish. Okay, so if you have a question, please wait till the very end. Everyone will be getting a link to this recording. So if you have to leave early or if you're having technical issues, oftentimes it's just your internet connection. Just log off and log back on again. But if you still can't hear or see the PowerPoint presentation clearly, we will send each and every one of you a link so you can watch the recording at your own leisure. The last is the most important. This is a Zoom presentation over a Zoom platform, but that doesn't mean it's interactive. We want you to please disable all cameras and all microphones. It's just a static PowerPoint presentation, so we're not going to be interactive, talking over our microphones or showing our video cams, okay? So if you could disable those, that would be great. And with that stated, let us begin today's educational presentation. Okay, so we're going to be talking about short-term consistency and the secret to short-term consistency. Now, I know a lot of you may think, well, yeah, it's got to be pretty complicated, right? Or you must have some special $10,000 indicator or some secret trading tool that no one knows about, right? No, it's really just a philosophy. It's a mindset that you have to really adhere to. But once you understand it and once you fully grasp it, it really makes sense, because the secret to short-term consistency is simple. All you have to do is want what the market wants. I mean, think of it. If the market wants to go higher, if it wants to go up, then you want to be a buyer. If the market wants to go lower, if it wants to go down, you want to be a seller. Unfortunately, we're always taught the opposite, right? Stock is down too low, or the market's down too low, or that currency pair is down too low. It's oversold. You got to buy it, right? We always want to do the opposite. Or it's way up too high. It's overbought. It's never been this high before. You've got to sell it. We always want to do the opposite of what the market wants. But if we're in sync with the market, if we learn how to be in sync with whatever market time frame we're trading, that will increase our odds for short-term consistency. Here's the only trouble, though. How do we know what the market wants? Everyone's got a different idea of what the trend is, how to be in sync with something. For example, if we look at this chart here, solar chart in Zion, obviously the market wants to go down right here, right? So you say to yourself, well, I'm either going to get out of the way, I'm going to sell my position because I don't want to lose any more money. Or if you want to be more aggressive, you short it. Maybe you buy some puts or short the stock, right? So you say, hey, well, Steve says to want what the market wants. Obviously, the market wants to go lower, so I'm going to sell. And then this happens, right? Look familiar. You say to yourself, well, how do I know what the market wants? I mean, it's just changing all the time. It's very difficult, Well, it is, but what we have to do is understand that in order to be in sync and to trade in sync with the short-term trend, we need a tool that translates what the market wants to do. You see, we're trying to understand what the market wants to do, but it speaks a different language. Have you ever tried to have a conversation with someone from a different country or even from the United States, but has a different dialect and you can't understand what they're saying? Well, that's what it's like when we trade. we're trying to be in sync with it. We're trying to make money and trade with it, but it speaks a different language than what we speak. That's one of the reasons why most traders fail. But if there was a tool that could translate for us what it wants to do, then it would make it so much simpler to have that consistency that we're searching for. So is there a tool that can do that? I'm happy to say there is. That tool is the PET-D. This is probably one of our most popular tools we have at Specialist Trading and Pro Trader Strategies. Most people, though, do not understand it. So let me tell you exactly what the PET-D is. It's a proprietary algorithm. I was first taught this tool some 4 decades ago on the floor of the Pacific Stock Exchange when I worked, but it's extremely complicated formula. It's very cumbersome. By the time you calculate the formula on a hand calculator, you've got to start calculating it again for the next bar. It's very difficult. So we've made it a proprietary algorithm with the help of our programmers and high-speed computers now. You don't have to worry about calculating it. So what we do is we've turned it into a color bar algorithm. The PET-D will simply color each bar on a tick-by-tick basis, either green or red. Now, it just opens up a whole different world of uses for it and ways to apply it. For example, one of the most popular ways is as a signal confirmation tool. It will confirm your signal, whether you want to buy or sell, by simply looking at the color of the bar. It doesn't matter what strategy, it doesn't matter what technique, it doesn't matter what market or time frame. But here's what we're going to be talking about today. We're going to use it in its most simplest form, and that is as an early trend detector, because that's really what it's doing. It's telling us on a tick-by-tick basis what the market wants to do. So we can discern what the trend is before most people know that the market's going to turn around and go back up, or if it's topping out and going to go back down. For example, let's look at that chart again. All right. How could the PET-D have helped us? Remember, it's a color bar tool. It only colors bars red for a downtrend and green for an uptrend. Well, on our platform, we make it simple. All you have to do is click on the PET-D in the upper green strategy tab, and the colors will automatically appear. Now, as you can see, the PET-D told us well in advance when you had a series of red bars that it wanted to go lower. So we knew well in advance that the market was telling us it wanted to go lower. And even though the PET-D is not designed to pick tops or bottoms, it told us well in advance when you had a series of green bars that it wanted to go higher. So you see, it tells you what direction you should be trading. And once you know that, you can apply any technique, any strategy, any method, any system to that direction, and it will increase your odds for consistency. You see, you have this tremendous edge that's literally translating what the market wants to do. So how can we apply it? Well, I'm going to share with you one of our, I would say, most powerful short-term trading techniques using the PET-D. I'm going to explain to you all the rules on how to apply this. All right. What if we're looking for buy setups? What if we think the market's going to go up? Well, here are the rules, very simple for looking for buy setups. After a series of the same colored bars, I mean same colored green bars, a green bar will close either at or very near its low. That's it. So for example, here, we look at this generic chart. Someone looking at this once again would say, well, the market's not telling me anything, kind of just going sideways. Sure, it went up one bar, then it quickly went back down. So the market doesn't know what it wants to do. Well, not really, because once we apply the PET-D, what are the colors of the bars? They're green. So what is the market telling us? It's telling us it wants to go higher. It's translating to us what it wants to do. Now, even though we had some down days here, this was a down day where the market opened and closed down. Here was a day where the market opened and closed down. But what color is the bar? It's green. So even on a down day, the PET-D is still saying, hey, listen, I still want to go higher. Just had one bad day here, but it doesn't mean it's over. The trend is still up on the short term. Okay, so we know what it's telling us. It wants to go higher. Now we have to add a little edge, a little structure. And that's what the rules are I just shared with you. Look for a bar that's colored green that closes either at the bottom or near, very near its lows. As you can see, we're looking through all these bars. Well, this one closed lower, but not that close. This one closed higher. This was higher. But what do we have here? This closed just about close to its lows. So that's your buy signal. That's it. You can either buy on the close or, enter any which way you like. But right there, the market is not telling you The market is screaming that it wants to go higher. And look what happened after that, okay? Now, did we talk about any earnings reports? No. Did we talk about support and resistance? No. Did we talk about overbought or oversold? Absolutely not. Did we have a ton of indicators, moving average crossovers, volume, things like that? No. You see, trading is really simple if you get out of your own way. It's the trader that makes things more complicated than it has to be. It's the easiest thing in the world for a trader to overcomplicate things. It really is. There's no number. There's an unlimited number of tools, techniques, indicators, different strategies and methods you can apply to make yourself feel more valid that you're a real trader. But in my experience in over 4 decades, that's the opposite. Really, to be a consistent trader, it's about doing the opposite. It's about stripping away all these useless things, what my mentors called useless noise. So what you want to do is have your trading as simple as possible. And what I found in 45 years is that's how you become consistent, not by overcomplicating things. Let's look at another example here, but let's look at the sell setups, okay? Now the sell setups are the exact same, but we just turn it upside down. So after a series of same colored red bars, you want to identify a red bar that closes either at or very near its high. Okay, this is a sell setup. So let's look once again at this generic chart here. All right. Someone looking at this would say, okay, well, kind of headed lower, but not really giving me a lot of clues. And we may have a trend change. There's a doji right here. That class I took on the candlesticks, I spent $10,000 on. It says that this often happens at the bottom of a downtrend. So trend's probably going to change, right, to the upside. So that's what the market's telling me. All right. This is the way we're always taught how the market speaks to us. Unfortunately, there's no consistency in that. Sure, it works every once in a while, but the majority of the time, it doesn't. What's our translator saying? Well, when we apply the PET-D, you see how not only the last few bars, but all the bars are either colored or outlined red. Now, when you see them outlined red, these are bars that closed up on the day, right here, right here, right here. But what is our translator saying? It's saying that even though it went up on the day, the trend is still down. Okay, it's like in the middle of winter, in the middle of December or January, every once in a while you'll have a day where the weather all of a sudden goes wacko, and instead of having a 30 or 40 degree day, it's market goes. I mean, the weather goes up to 70 degrees or 75 degrees, and you say to yourself, "This is amazing." The middle of January and it's 75 degrees. All right. And then what happens 2 days later? It's right back down to 30 or 40 degrees, right? It's the same way with this. This is amazing. We're close to the top of the market here, right? It's a reversal. Well, no, because it's still telling us that we're in winter. It's still telling us it's outlined red, the trend is down, and look what happens. So let's add some structure in the form of that edge I just explained. We look for bars that closed either at the top or near, very near the top of their range. Okay, well, these ones didn't. These closed middle and they went lower. But this one closed right at the top, and so did this one. See that? So these are two sell setups. Now you can get in and with whatever means you want. This is not a system where, remember, you're in charge of your trading. You have to make the decision. Do you want to buy puts? Do you want to purchase a spread? Do you want to actually short the stock? Are you long? Do you want to use this to exit? It's up to you. We're never going to tell you how to trade or how to enter. It's your choice. But right here, the market is screaming that it wants to go lower. And look what happened. Okay. So you see, once again, trading is simple if you get out of your own way. All right, so let's look at some recent technique examples. All right, we'll look at the market and then we'll look at some other markets as well. And remember, everything you're seeing today, every chart, every indication, every PET-D example was taken and displayed from our PTS Primo charting platform. I developed this with Pro Trader Strategies. I'm very proud of this. I use it every day, and it really helps you tremendously because it's like having your own personal mentor sit there next with you and help you to learn how to trade. All right, so let's look at this example in HLT, Hilton, okay? How would most people look at this? They say, well, Steve, I went to that chat room and sure, it was going straight up. So the market's saying it wants to go higher. But look at this here. This is a classic reversal. Open, go higher, make new highs, and close near its lows. So what's that telling me? It's telling me it's overbought. And that guy in the chat room says, you got to sell because all the indicators are overbought. So, I want to be a seller here. And so for the next couple of days, you're patting yourself on the back. You say, see, Steve, I was right. Look at this. This is going lower. So I'm going to sell this. I don't like this. It's going lower. All right. But what is the market telling us? Well, click on the ATTENDEE on our platform and the bars are green. Even though we had 2 down days, one here and one here by the darker color of the bar, it's still a darker green. So that just means you're still in an uptrend. The market wants to go higher. And this bar right here, the last bar, happened to close near its low. So this is your buy setup. So sure, if you had sold short right here, you'd be patting yourself on the back for 2 days, but you would have had to been quick because we had a buy signal. And look what happened. Up 12 points after that. So what happened to the reversal, or what happened to the overbought? It was overbought for 2 days and then went right back up. Here's an example in Expedia. Okay, as we can see, it's going lower. We say to ourselves, yeah, the market wants to go lower, but look at this. We have another reversal, and there's probably some support right here. So this is a reversal based on some support. I watch what the institutions are doing, and there's major buying going on here. So yeah, I agree it was going lower. The market wants to go lower, but it looks like it's going to bounce a little bit. All right. That's the way most traders make their decisions. But what is the market telling us? Remember, we never listen to anyone or anything. I never give any instructions for anyone to buy or sell. You have to listen to the market, not me or someone in a trading room or some guy on TV. Listen to the market. And the market is telling us, well, sure, it went up for 1 day, but if we apply the ATTENDEE, it's telling us it wants to go lower. It still hasn't finished going lower. And what do we have here? 1, 2 days that close very close to their highs. So these are 2 valid sell setups. Where you thought the market reversed and you were patting yourself on the back for 1 up day, look what happened after that, 20 points. Now, the good news is if the trend is strong enough, you'll see more setups appear along the way. If you missed that, you could have sold right here. All right, here's an example in BBBY, Bed Bath & Beyond. Okay, originally the bars were red, telling us that the market wanted to go lower. All of a sudden, we switched to green. So the market changed its mind. Market does this all the time. And what do we have here? A bar that closes right at its low, 14 points the next day. All right, this was just last week. Now, obviously, it opened much higher and went much lower. But trust me, if I had bought this, I didn't. I'll be honest with you, I didn't. If I had bought this, and I saw the next day it opened up 14 points, I would have most likely sold all of my positions and say, hey, that's a nice profit, 14 points in less than 24 hours, I'll take it. So, even though it closed lower, I would probably assume you would have at least taken some type of profit off of 14 points. Here's an example of 2 sell signals in JD.com Inc. As we can see, all these bars are red. We closed near or at the highs. 25 points in the next couple of weeks. And once again, if you miss those, or if you said, well, I had a real tight stop, Steve, and I got stopped out with this little high here, okay, you could have taken advantage of this one right here and had that nice gap down. As we look at MYNZ, all right, once again, kind of going sideways market. We're always taught stay away from sideways market because you get whipsawed, but if we apply the ATTENDEE, what's it telling us? Well, initially, the bars were red. So it was telling us that, yeah, we should be looking to sell. And on top of that, we see here that there was a sell setup right here. The bar closed at or near its very high. Now, this is what we mean by consistency. When I tell you that our methods and techniques are very consistent, it does not mean that every setup, every signal is a winner. There will be losses. It's just with anything. No, think of any career, think of any endeavor. There's always going to be losses. Think of any athlete. Every athlete does not hit a home run every time they go up to plate. Every athlete does not win a gold medal every time for every event. Every athlete does not make a basket when they shoot. But it's just about consistency, being sure that you have more wins than losses and they're able to recoup those losses. So let's say we had taken this signal right here and sold and nothing really happened and all of a sudden the bars changed green. Well, we teach our members different stop placements in different ways, once again, that fit your nature. It's up to you to decide. But had you taken a generic stop most likely you would have had a 3-point loss on this, okay? Not a big loss, but depending on how much you invested in, it's still a loss. But here's what happened. Once you reversed the color of the pet D, you also have to reverse your trading. So take the loss and get back in, because there were 3 buy signals right here. You had 3 chances to get in to the buy side because the market changed its mind. And had you done that, look what happened in the next couple of weeks. You could have potentially captured 20 points. So you could have made back potentially your loss and then potentially made some more. It's up to you. But you see, this is what we mean by a consistent method, a method that's able to recoup its losses. And there was one more buy setup. If you didn't take advantage of this, you could have taken advantage of this one right here. Let's look at SNOW, snow, okay? Once again, it's going lower. And what do we have here? For all you candlestick traders, there's a piercing line pattern. That's a very bullish pattern, right? A piercing line, usually a sign of reversal of trend. So most of traders would say, well, Steve, yeah, but it's been going down, but the market's telling me it wants to go higher. Is it really? If we click on the pet D, all the bars are red. And even though we have a so-called piercing line pattern, what color is the bar? It's red. So sure, sometimes it may work, but the odds are telling you that it would be more in your favor to sell this than to actually buy it, because that's a sell setup. It closed near the top of its range and it's colored red. 85 points, okay? What happened to that piercing line pattern, that real bullish candlestick pattern? Now let's look at some other markets, some other time frames, because we know not everyone just trades daily bars of stocks. I want you to see how easily it is to transfer this simple technique onto any market or time frame. Let's look at a 4-hour chart of the Australian dollar. This was just a week or 2 ago. Once again, doesn't look like much is really happening here, right? Kind of sideways to up a little bit. The market's not telling us anything, Steve, right? That's the way most traders would feel. But if we apply the pet D, actually the market's telling us it wants to go higher. You see how simple it is when you have a translator? It's telling you it wants to go higher. Now, we just can't buy, because let's say you had bought right here just after this data. Well, if you had bought right there, then you would have had 2 days of losses, and you would have said to yourself, hey, this stuff doesn't work. It says it wants to go higher, but now it went lower. So we have to add a little structure in the form of this technique, looking for a bar that's colored green that closes either at or very near its low. So if we scan here, we don't really find any bars that meet that criteria until right here. Close very near its low, so that is a buy setup. 155 pips coming into last week. That's over $1,500 per unit that potentially you could have captured. And once again, if the trend is strong enough, it will continue to generate signals along the way. Here's another setup. This was in Bitcoin, and this was in the beginning of the year. Now, everyone was thinking, well, we've had a kind of a little sell-off in Bitcoin and cryptos. It's time for them to stabilize. And in fact, that guy I really listen to and go to his blog, he says that there's major support here, a lot of buyers, and it just looks good, it feels good. So my friends, my brother-in-law and everybody down the street is buying it, so I think I want to buy it too, right? What is the market saying? You see how everything I decided was based on someone or something else telling me what they thought this was going to do? What's the market telling me? What's our translator telling me? Once I apply it, it's telling me it wants to go lower, okay? So I don't care what any friend says. I don't care what anyone says in a blog or any guy says on the web. I'm not going to buy this. In fact, if I were more aggressive, I'd look to sell. And as you see right here, we have a bar that's colored red that closes near its top. So that's your sell setup. If you wanted to take advantage of that, that would have been a wise choice. Bitcoin dropped nearly 15,000 points in 3 weeks, okay? Now, were we looking at any fundamental data? Were we looking at any news events? No. The market tells you just about everything you need to know. There's absolutely no reason to overcomplicate your trading listening to things like that. I personally stopped listening and looking at news events and what's it called, economic figures coming out, such as jobless claims or unemployment, things like that. I stopped looking at earnings over 4 decades ago. And if I'm still here trading, don't you think that you really don't need it? Now, remember, we never tell anyone how to trade. We just give you information. If you feel you need to look at news and need to follow earnings and things of that nature, by all means, go ahead. But if someone ever asks, it's not required in any of our trading methods at all. Now here's a chart of GLD. That's the ETF that represents gold. We saw that gold had a big run up. Okay. A lot of people say, gosh, I missed that. Well, let's look at these 4 bars here. This was in February, the beginning of February. They're all colored green, and this bar closed right close to the low. Therefore, the market is telling us gold wanted to go higher, represented through the ETF. Look what happened. We all saw gold in the last month. Now, someone would say, yeah, Steve, but that's because of the situation that's going on in the world. Well, it's funny because at that time, gold wasn't doing anything. So how did we know? You see, the market told us. We're not following any worldly events at Specialist Trading. Keep your trading simple. There's no reason to overcomplicate it. Let's look at USO, okay? That's the United States Oil Fund. This is another ETF that represents oil. A lot of traders say, gosh, have you seen oil? Now, even though oil the last couple of days has really started to fall down, it took off. It was tremendously going almost straight up. Most traders love to play the victim and say, gosh, I wish I would have known. There's no way to know that it was going to take off. You know, I don't really understand all this economic news and everything, so I couldn't figure that out. Well, I don't either. So there's no reason to look at that, in my opinion. I don't understand that stuff. And someone would say, well, how would you know to buy oil or a USO fund, the oil fund? By simply applying the PET-D and then identifying bars that close either at or near their lows. And we had 2 right here in January, okay? 1 in December, 1 in January. This is about 3 months ago. We all saw what oil did in the past 3 months. Now, if you sat there and complained and said, gosh, I missed this oil run, well, look at all the times you could have gotten in. Look at all the times the market was giving you opportunity to get into oil this last 3 months. Now, if you like to invest, I know a lot of traders may say, well, Steve, I'm not a short-term guy. I like to invest or swing trade. I like to look at weekly to monthly bars. Okay, here's a weekly bar of CVX, Chevron. Same thing. Here's the way most traders, myself included, when I first started, this is the way we would analyze things. Say, hey, look at that. It's been going up, sure, but look at this. It can't seem to get through that resistance, all right? Until it breaks out there with some strong volume and maybe on some valid economic news, I'm not going to touch this thing. In fact, it looks like it's rolling over because all the indicators are tremendously overbought. And lastly, that guy in a chat room that I go to on a nightly basis, he doesn't like this at all. He says it's going to go much, much lower. So I'm going to follow his advice because he must know what he's doing, right? He's on TV. So I'm going to sell probably. Well, every justification I made was off of someone or something else telling me what the market's going to do. What is the translator telling us? Click it on, telling us it wants to go higher. We don't care if there's resistance. It doesn't matter. What does the market want to do? Market doesn't care about those things. Well, now we add that structure, and what do we have? 2 setups. We could have gone long right when it looked like most traders were saying, well, those are bad days. Those are reversal days. And we all know what happened to the market coming into March. We had a really nice run up, especially in Chevron because it's oil related. Now let's look at Netflix, okay? Here's a weekly chart of Netflix. Either you're an aggressive trader where you like to buy puts and go short, or maybe you were involved and you were long Netflix and you say to yourself, gosh, I'm not sure what to do here. Well, if you call up your stockbroker or maybe your brother-in-law down the street, they'd say, well, hey, listen, there's tremendous signs telling me that it wants to go higher because that $10,000 course you took on the candlesticks say that this is a very bullish pattern here. This is a bullish engulfing pattern, extremely bullish. It gets its name from being a bullish pattern, right? So that's telling you that most likely Netflix is going to go higher. So if you're thinking about selling, that's a bad decision. On top of that, that $10,000 course I took on the institutions where they tell me where the support and resistance is, where they're buying or selling, it's telling me that there's major support here. The institutions, the big banks with all the big bucks, they want to buy here. So who am I to say that they're going to be wrong, right? Once again, this is the way we're trained to make a decision off someone or something else. We're never trained to make a decision off what the market is telling us. And the reason is we don't know how to listen to the market. Good news is there is a tool that tells you what it wants to do, our translator, the PET-D. If you were long Netflix in your long-term portfolio, or if you were thinking about buying it, Well, all you have to do is click on the pet D, and you would have seen that the market, not some guy on TV, not some guy in a trading room, the market was telling you it wants to go lower. Now, if you're aggressive enough to sell it, you would have seen that this bar closed at or near its very high. So that was your sell signal. Now, this was at the end of December coming into this year, January. Netflix fell 274 points in 3 months. Now, was this based on any news, any economic news on the company? Absolutely not. Why? Because the market told us it wants to go lower. Okay, let's recap. Remember, this simple technique calls for, after a series of the same colored green bars, you want to find and identify a green bar that closes either at or very near its low. If you see that, that's a buy setup. Conversely, after a series of same colored red bars, identify a red bar that closes either at or very near its high. That's a high probability sell setup. Now, does this work 100% of the time? No. I shared with you a couple of examples where you may have gotten stopped out, depending on where you decided to place your stop. But remember, all of our techniques, all of our methods and strategies are extremely consistent. Consistency means it's an awareness that you will have losses, but it is based on being able to recoup those losses. So that's the whole point. There's nothing wrong with falling down. If you're trying to learn how to ski or ride a bike, remember when we all learned how to ride a bike? You didn't just get on the bike and all of a sudden you were riding off into the sunset. You fell down, or you had to brace yourself because it didn't happen, but you were able to get back on and do it. That's the same thing with consistency in trading. Every once in a while you will have a loss, but you have the confidence to pull the trigger on the next setup because most likely it may be a winner. So ask yourself, the first quarter of 2022 is nearly over. Can you believe that? Looked like we just had New Year's just a couple of days ago. Well, the first quarter is nearly over. Do you think this technique can help your trading for the remainder of the year? Remember, this is just one of the many, perhaps even dozens of techniques that are readily available to Pet D users. This is just one of them. In my free webinars I give on Wednesdays, every once in a while I'll give other techniques. I've given about 4 or 5 of them already in our free webinars. This is just one. How would you like to have access to all of them? Well, we have a special attendee discount for all of you taking time out of your Wednesday to hear me speak today. We're going to offer you a deep discount for the Pet D. This is our roadmap for any market special. You'll get the proprietary color bar algorithm that includes the add-on. So if you'd like to apply it onto your current platform, such as TradeStation, Metastock, MT4, Sierra Charts, NinjaTrader, even Thinkorswim, you can be able to apply that onto a platform so that you can see the colors change, all right? Now, we're also going to include in the course 2 continuation trading techniques. These are different ways to trade, different from what I share with you today. Also 2 pullback trading techniques and a trailing stop technique. The beauty of the Pet D is, remember, you can apply it to any market, any strategy, any time frame. Now, I know you'd like to see it on your current platform because that's mainly where you enter your trades or what you're used to. But everything you saw today, all the ease of use was with the PTS Primo charting platform. So here's what we're going to do. Should you decide to become a student of mine in the Pet D course, by this Friday, we're going to also throw in a full year of the platform, free. That's over $1,000. Closer to $1,500 value. We're going to throw that in absolutely free with the course. So you have a free use of the platform. Everything is one click away. Now, I know some of you would say, well, it's okay. I'm used to my platform. But remember, there are a host of different things on the platform you won't find anywhere else that are also included. Tons of tips and techniques and methods that you'll only find on the PTS Primo charting platform. Things that I've taken from my 45 years that I've accumulated, most of them from the trading floor. For example, in addition to the one-click Pet D access, you also get our enhanced buy-sell line. There's 4 different features and ways to find out the overall trend. Now, the Pet D will tell you the short-term trend, but the overall trend is discerned through the buy-sell line. So you get 4 different features of that. You'll get our strength of trend tool. Obviously, this tool tells you whether the trend still has any strength left into it or if it's running out of steam. This is a great tool to have. You can apply to any market or time frame. You'll get over 90 of the most prominent technical indicators, auto-generated entry and exit levels included with one-click access. But here's the best thing, in my opinion. the signal scanner, because you can actually scan on a nightly basis for all the whatever market, all the data you're looking for, either all the green colored bars that close that day or all the red colored bars. And we give you a host of different markets to choose from. You can look at the S&P 500, you can look at cryptos, you can look at currency pairs, futures, makes no difference. Asian markets, European markets, Canadian markets. We provide you with all of that data. So here's an example. Let's say it was just last week and you're looking at Costco and you do a scan that night and you scan for all the stocks that closed with green color. And guess what? You see that Costco was. And in addition to that, Costco closed very close to its low. So you say to yourself, you know what? That's a buy. And that was on the 8th. Now, you could have bought that night. If you run the scan maybe 5 minutes before the close, you would have seen that. Or what you could have done was maybe bought the next day. Either way, what was the market telling you? Not me. These are not my decisions to buy or sell. This is the market telling you. We don't have a chat room or a trading room. So this is you deciding and finding a setup for yourself and deciding whether you wanted to take it or not. This is the way you become a consistent trader, by making your own decisions. Well, let's say you decided to buy it on the 8th. Costco rose 25 points in 1 week. Now, this was an updated chart coming into about an hour or so before I started this presentation. That's how simple this is. 25 points you could have made, and this just happened last week, okay? So this is our roadmap for any market special, the PET-D with all these different things included. So let's break it down, all right? Now, usually just the PET-D course alone would cost you close to $5,000. If we include a full year of the platform, we're talking about an extra $1,500. So we're talking about over $6,000, $6,500 altogether. Not to worry, we're not going to charge you anywhere near that. Here's what we're going to do. We're going to save you $2,000. The PET-D with the platform for only $39.95. You'll save over $2,000. But on top of that, we have an extra bonus. If $39.95 is still too difficult for you to come up with in one lump sum, we're going to provide you with payment plans. So that means for a small deposit, a very small deposit, you can still be up and running in the class, and you'll still get a full 12 months free of the platform. So you don't have to come up with $39.95 if you don't want to. You can establish a payment plan with my sister site, Pro Trader Strategies. They're in charge of all the discounts. They're in charge of all the tech support with the platform, and they're very flexible. They'd be very happy to work with you. So this is a great, great offer. You can pay in full and save over $2,000, or you'll still have that deep discount, but you'll establish a payment plan and you'll be still up and running as early as today. A year from today, you will have wished you became a member of this course. You see, you don't want to be where you are right now a year from now. That's depressing. I know it is, because I was there myself. My first year and a half, 2 years of trading, I struggled tremendously. And I thought, well, maybe this isn't for me. I'm not really seeing any progress. And it wasn't until my mentors taught me these things and the same things that I teach my students that my trading started to turn around, okay? So you don't want to be where you are a year from now and saying to yourself, gosh, I wish I would have purchased that course or become a student of Steven Primo at Specialist Trading, because now I've kind of run out of money and I can't even afford it. So take advantage of it, especially this deep discounted price with the payment plan if you'd like. Here's how to do that. Contact Pro Trader Strategies. They're in charge of all the discounts. They have trading consultants on the phones right now. So if you'd like to call them and ask them a question, there's absolutely no obligation. But if you want to ask them a question about pricing or establishing a payment plan, they would be more than happy to give you a quote and take care of you over the phone if you're interested, okay? I would suggest that's probably the better way to go. Give them a call at 310-598-6677. Now see this link you see at the very bottom here? This is the link that will take you to the info page. Also, if you'd like to sign up online, you can do that there, or there's just more information about what's offered. Now, you'd have to copy and paste that link onto your browser, but a link has been posted onto the chat box. So if you open up the chat box, excuse me, on the Zoom platform, you'll see that a link is posted there. Excuse me, I'm losing my voice after speaking for an hour. And you can just simply click that on. Okay, with that stated, before I lose my voice, I promised you I would answer any questions. So if you happen to have any, just go to your chat box and I type them in. I promise I'll answer them to the best of my ability. And I'll leave this information up here. Remember, there's no obligation. If you'd like to talk to someone, a trading consultant at Pro Trader Strategies, they would be more than happy to give you a quote or talk about pricing with you over the phone, okay? Let me see, we have a question here. Just let me move back. It says, you have not mentioned the buy-sell line. Is that a consideration in the technique you have demonstrated? That's a good question. For those of you who aren't familiar with the buy-sell line, remember the buy-sell line tells you what the overall trend is. The PET D tells you what the short-term trend is. That's where we get the title of today's presentation, short-term consistency, the secret to short-term. So therefore, if you are looking basically just for short-term results, you only have to rely on the PET D. But if you want a little bit more security of knowing that the overall trend is in sync with the short-term trend, then yes, by all means, you can apply both. But remember, what have we been saying for the last hour? You are in charge. That's your decision. Remember, this is not a system where everyone has to trade the exact same way. In fact, that goes against our philosophy. Our philosophy is the opposite. No two traders should ever trade alike. So that means one trader could say, you know what, I just use this technique the way Steve explained it with the PET D. And someone else could say, oh, you know what, I feel more comfortable trading it with the buy-sell line. Is one more right than the other? Absolutely not. The only thing you have to worry about is what makes you feel comfortable. So if you feel comfortable just with one or the other or both, that's fine. But remember, this is not a system. We encourage you to research and experiment on your own to see if you want to add one or more of our techniques and say, hey, I like to trade it this way. Great. Remember, a good mentor does not trade for you. He provides you with the information so that you can make the decision yourself. Okay, so that's a good question. Any other questions? Oh, I get this one all the time. Someone says, what is educational correspondence? That was on the slide that showed you what's offered. Educational correspondence simply means that you will all get access to my private email address. That means if you have a question, something doesn't make sense in the course, and you say to yourself, Steve, gosh, I don't really understand this. Can you help me with this? Sure, just send me an email, preferably with a snapshot of what's, or tell me exactly what the chart is and what time frame. And I will go over it and try to answer it the best I can with you. So it makes it easier. It's like having your own personal mentor there, having me sit with you. But even though I can't do that, we have students all over the world. The next best thing is you have my personal email that comes directly to me. All right. No one else answers it. No one else sees it. So not to worry that it's being passed around to an intern or an assistant. It comes directly to me. All right. Any more questions? Remember, the PET D is one of our most popular, if not our most popular trading tool. It's so simple, and there are a variety of ways to use it. We have other trading tools or features or techniques, but they're kind of limited in their use, whereas the PET D is almost unlimited. Years ago, I would give webinars on the PET D where I would give over 60 or 70 different ways to apply it. It's just so many ways to use it. And a lot of our students have come up with different ways to use it on their own experimentation, which is, once again, which we encourage. So it's just a great, valuable tool. You can use it as a stop placement. You can use it to confirm your signal. Let's say you have your own strategy that you feel comfortable with. You don't need a strategy. Okay, well, we feel it will increase your odds for consistency if it's confirmed by the PET D. In other words, if you get a buy signal, that bar should be colored green. We feel that you will increase your odds for consistency tremendously just by applying it that way. But that's another webinar to go over, and I'll probably talk about that one day in the near future. Okay, if there are no further questions, I just want to thank you for taking time out of your Wednesday. I hope you learned something, not only how to apply the PET D with this very powerful technique, but also a little bit about our philosophy of trading and our concepts on teaching, how we really want to educate you and have you become a consistent trader. There's really more than enough for everyone to go around. Profits are not limited on a daily basis. There are an infinite amount of profits to be taken on a daily basis. We just want to share some of the ways with you how to do that, okay? Okay, as we take one last look at our disclaimer here, I want to thank you once again for taking time out of your Wednesday. I wish you the best of luck, but most especially, I look forward to you becoming a student of mine in the PET D course. Thanks so much for attending today. Have a great day and have a great rest of the week. See you next time. Bye-bye.